Best Buy is down over 50% from this time 1 year ago, and they really benefited from the lockdowns and stimulus that was pumped into the economy. This stock was at highs of $140 per share and is now down to about $70 per share at the time of this recording, which paints a bad picture for shareholders and potential investors. But on this channel, we look for value investments, so let's try to analyze the business overall to determine where Best Buy might go from here, if it's approaching a margin of safety, or if we should completely disregard this business. Well, make sure to keep watching as we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. But with that being said, today we're going to take a look at Best Buy's Q1 2023 earnings results, where we'll do a deep analysis into the financials of this business. We'll then proceed with an analysis of the technicals here, and as you can see, we are down 50% from those highs just 1 year ago. And finally, we'll conclude with a valuation of this business to see whether or not this is something we as retail investors should add to our portfolios or not. And if you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. And guess what, guys, we're continuing the trend from last video. Today we're going to do this in 5 minutes, so start the clock. All right, so as you can see, we are down about 50% so far from November 2021. And actually, if we take a historical viewpoint of Best Buy, we can see that they have been a steady compounder, as you can see, over the past few years and really since its inception, which is great to see from a potential investment. But historical results are not indicative of future performance, so we have to see what's actually going on in recent years. And as you can see, we've came down. We have this green zone down here. We consider this our buy zone. Every time it got in here in recent years, it has propelled the stock much higher and up into our red zone, which is our major resistance. Okay, and as you can see, every time we've gotten here, we've propelled lower. And so now we're at this point where you typically would be bouncing in and around this $100 to $90 range. Now we've broken through that, we've gone lower, and we're actually pushing towards our next support level here, which is our buy zone, which is $60 per share or so. So guys, what's actually going to happen with Best Buy, we'll have to see in the next few weeks, because if we do approach this buy zone, I mean, guys, we've seen what's happened historically with this thing. It has always gone higher from these levels. It has never failed from pushing down into these levels. It's always gone higher. So will we see a repeat of that bounce pattern here? I actually do think so. But let's actually jump into the earnings highlights now to see what actually happened with Best Buy for this quarter. All right, so jumping into our earnings highlights here, revenue came in at $10.65 billion for this quarter, down 8% year over year, which was actually still a beat by about $220 million. Earnings per share came in at $1.57 and is the result of accurate analyst expectations on this one. In the actual report, they also mentioned they expect their year-end revenue to come out about $48 to $49 billion and earnings per share to come in at about $8.40 to $9 per share, which is actually very strong. And what they're really looking for here, since we came in with only $1.57 here in this quarter, is that they're going to have a strong Q4 and Q3. So remember this number for when we use this for our evaluation later on. But with that, let's jump into our income statement here. And as you can see, we come out with revenue of $10.6 billion, cost of sales of $8.2 billion. So we're left with gross profit of $2.5 billion, which isn't amazing, as you can see from the gross profit margin here. Okay, we take out our expenses, our SG&A, etc., and we're left with only $460 million in operating income. And if we look at this from a year-over-year perspective, yeah, we're down quite a bit from this almost $800 million figure. Not good. And actually, they also mentioned that in their report, comparable sales decreased about 8% for this quarter. So that's not good either from their fundamental side. Now, jumping into their net earnings, we deduct the rest of our expenses, and we're only left with about $341 million here. And last year we had $600 million. So again, it's not looking good there on the bottom line, although top line is not so bad. When we look at our cash versus our debt figure, this should actually say million. They only came in about $640 million versus their $1.1 billion figure in debt. So it doesn't paint a terrible picture here, but you would want to see actually that they can service their debt with that cash that's sitting there on the hand. Now, if we're taking a look at the cash flow here, guys, we'll pull down our net earnings figure here of $341 million, add back in our depreciation, amortization, stock-based comp, etc., and we get down to this number here, our total cash provided or really used in operating activities of $1.3 billion. Okay, this is a negative figure. Last year we actually had a positive number here of about $105 million. So this year we're down about $1.2 billion. It's not great to see. But of course, with less stimulus means less spending, and so we now have this negative figure here. Deduct our capex, it's not looking good. We're at about $1.5 billion in cash outflows so far. Now we need to see what they actually do with the cash, even though it's cash outflows, to reward shareholders. And as you can see down here, they are rebuying stock and they are paying a dividend as well. And actually, the board has actually committed to about $1.5 billion of share buybacks. So ultimately, they're looking to reward shareholders through buybacks and dividends. Now let's quickly take a look at our summary tab before we put a valuation on this business. We have a gross margin of about 22%, not great. Operating margin of about 5%, which is also not great at all. But then they have return on invested capital, which is about 22%. And this is a historical figure and is actually skewed to the upside because of the large amounts of spending that has been occurring in the economy of recent years, and ultimately led to a higher figure than I would actually project for Best Buy. Okay, now we're on to free cash flow. Historically, they're making about $3 billion in operating free cash flow, spending just less than about $1 billion worth of capex, and then we're left with about let's say $2.2 billion of free cash flow on an annual basis. That's actually a solid free cash flow yield of about 12.5%. Now, looking at our dividend yield, about 4.8%, plus our share buybacks, which is also 8%. So we're actually looking at decent returns here for Best Buy. However, what's happening on the balance sheet and their cash position is not looking good. And we'll get back to that point in just a second. But for now, let's go through our calculator to see at what price point we can actually come in here and pick up shares of Best Buy for a margin of safety. All right, so if we look at their historical financials, we can see their earnings per share figure here. They've actually been increasing slowly but surely. They made it up to about $9.8 in earnings per share. Now, conservatively, I would want to look at more so towards $5 per share. So we'll use both numbers in our calculator to see at what price point we should actually come in here and pick up shares of Best Buy. And so jumping in my calculator here, if we're going to be conservative about Best Buy, let's assume that we can get 10% return on our money. They do pay a dividend, as you saw, and it's actually pretty nice, almost 5%. If they can grow at 8% for the next 5 years, 5% for the 5 years after that, on a 20 PE, even if we drop this to a 15 PE, we're looking at about $110 per share. This is an extremely conservative estimate here, seeing as they've already reported about $1.57 for this quarter alone. From a normal case, we could be looking at a hefty upside here for Best Buy. Now, if we're looking at this optimistically, even though we're conservative still, 10% growth rate, 6% for the 5 years after that on a 25 PE, even if we drop that to a 20 PE, guys, we're looking at about $150 per share, a sizable upside, and back up over 50% from where we are currently. And guys, even if we don't grow at all for the next 10 years on a 15 PE, we're looking at an intrinsic value, a margin of safety. You could buy this and expect zero growth at $70 per share, let's say. The stock actually touched that level today, guys. Now, if we come back to our calculator, and remember, they did forecast that they could come out with about $8.9 in earnings per share by the end of the year. And if we look at this from a conservative point of view, we're actually looking at some significant upside here for Best Buy, but this is extremely high. I mean, we're talking like doubles and triples here across the board. So that's why I like to look at this conservatively. But if they are able to get up to that $8 or $9 in earnings per share figure, guys, we could be looking at an amazing investment, an amazing return on our portfolio here with Best Buy. My only issue at this point in time is the fact that I don't really like what they're doing on the balance sheet at this current point in time. They actually went from about $4 billion just 1 year ago in cash. Now they're only at a $640 million. So they're actually not doing so well in the cash side of things. And as you can see from the current economic climate, they are producing negative cash flows as well. So these are two things that I do want to see them turn around at. So, I mean, it might be worthwhile to get a starter position here, but from the numbers alone, we're looking at a nice return on our investment from Best Buy here. And right now, I'm going to be looking to see if we can get a little lower here, maybe down to the $60 per share figure and into our buy zone. And definitely, I think I'll be picking up shares of Best Buy. But with that being said, guys, that is the analysis for Best Buy's Q1 2023 earnings results. If you made it this far in the video, please like and consider subscribing for more of this content. And with that, I'll see you on the next one.